Welcome to Trade Pro. In this video, I'm going to teach you how to trade with the Bollinger Bands like a pro the right way. You've probably been misled in the past and given up altogether on trading with the Bollinger Bands because it just simply didn't work. Most new traders are extremely interested in learning the Bollinger Bands because they're so simple and easy to understand. But when people kind of get into it and start trying to learn about it, it just doesn't really work. And there's a couple of reasons for that. So I'm going to teach you the correct way to trade with the Bollinger Bands and also some more advanced tips and tricks that you can employ with this simple strategy in order to improve your results. So let's get into it. So the most common way that the Bollinger Bands are used is to sell the top sides and buy on the bottom sides. But this is completely the wrong way to go about it. You need to know the direction of the main trend in order to use the Bollinger Bands the correct way. So that's why I have a 200 period exponential moving average on my chart, where when price is above it, price is in an uptrend. So you're only going to look for times when the Bollinger Bands are touched on the bottom side. Those are potential buying opportunities, and you need to completely ignore any time that the price touches the top bands if price is in an uptrend. Price doesn't care about overbought when it's in an uptrend, all right? So you need to only be looking for discounted prices at the bottom Bollinger Band when price is in an uptrend. This is a great time to look for an entry when you get a touch such as down here, this area, or down in these areas. You don't want to be looking to short on the top side of the Bollinger Band, or you're just going to get completely destroyed trading counter trend. And if you've been watching my channel for any amount of time, you know that I always recommend trading with the main trend, entering into the trend at a discount with expectation of a trend continuation. Trends continue more times than not, and you want to enter into trends at a discount so that you have a good risk to reward ratio and have some good upside for your profit target. So this is the way that you want to use the Bollinger Bands: buying the bottoms in an uptrend, or selling the top sides in a downtrend. Now I'm going to get into some more advanced techniques where you can get better, more accurate entries and not just blindly be buying the bottoms or the tops depending on the trend direction. But it's a great place to get started, is to start thinking about the Bollinger Bands as a way to get into a trend at a discounted price and where that pullback in the trend is likely coming to an end, and expecting that trend continuation. All right. So let's get into some techniques where you can better predict the end of a pullback and not just go at it blindly, because it always, it doesn't always work out so perfectly like in this current example on the screen. So let's talk about some more advanced ways that you can improve the results of this simple trend following Bollinger Band strategy. Now, there are those simple things like support and resistance levels, trend lines, and those basic concepts that people tend to use. Those are fine, but I prefer more of a multi-time frame approach with divergence. So I'm going to pop up the MACD and the RSI, and we're going to go down to a lower time frame to see if we can spot some more precise entries and maybe just add in some additional factors that are going to give us a better chance of nailing that bottom of the dip to get in for a really great price. So just for this, let's just go to this most recent one here, where we get a fantastic divergence on the MACD to give us the perfect entry, where you can combine both the divergence of the MACD with the bottom of the Bollinger Band for a really high probability trade. So see here on the MACD, we get this much higher low on the MACD and the histogram, but at the same time, we're getting a lower low on the price action. So remember, that was touching the exact bottom of the Bollinger Band over here. And then if we go down to the 2 hour, we get that divergence as it touches the bottom. So it gives you a really confident, high probability entry and extremely precise. So you can have that additional factor. Now, if we go over to one of these other ones, like here, we're going to have to go down to a much lower time frame to really be able to spot the precise entry. So we still don't have it there on the 30-minute. And let's look down onto, oh, sorry, I meant the hourly, but on the 30, we do get it. So we get that regular divergence on both the RSI and the MACD. So we can get a very, very confident, high probability entry here using both divergence on the lower time frame in combination with that 4-hour bottom touch on the Bollinger Band, and also going with the main trend direction. So let's see, where was that? We're over here, right here. So we're going with the 4-hour main trend direction, and we're finding that regular divergence on the lower time frame, bullish divergence only. We're not looking for bearish divergence and an uptrend. We're only looking for bullish divergence. So we have that lower time frame bullish divergence at the same time coming to the bottom of the 4-hour Bollinger Band in a 4-hour uptrend. So, we have all these different factors on our side that are really going to put the odds in our favor. Another thing you can even do is look for hidden divergence as well. And we do get that hidden divergence. So as price makes a higher low, at the same time, we have indicators making a lower low. So we can see here, RSI makes lower low, price makes a much higher low, and you can see the same thing over here. We have hidden divergence compared from this pullback to this pullback. So if we look at this, we're getting hidden divergence on the 4-hour as well. So you can combine the hidden divergence, you can combine the trend direction, you can combine the Bollinger Band touch of the bottom, and you can combine that lower time frame regular divergence to really get a high probability and really precise entry into the trend at a discount. So those are some of the tactics that you can employ and get some really fantastic results. All right, now the last example here, there's no regular divergence, but we can use hidden divergence on this one. So if we take a look, we do get the higher lows on the price here. And when we get this touch, RSI has gone from being all the way up here, all the way down over here. So we have quite a strong hidden bullish divergence to go with this. So another thing, combining that hidden divergence with the regular divergence, you don't necessarily need both of them, but both is even better. And, there's many different ways that you can determine trend direction. So you don't need to use the 200 period exponential moving average. It doesn't need to be done on the 4-hour time frame Bollinger Bands. There's tons of different ways that you can accomplish the same goal. But ultimately, what I have expressed on my channel, time and time again is the idea here is to enter into a trend at a discount and go in for that trend continuation move. All right. In my opinion, that's the best way to trade. So that's why you'll see so many different ways to accomplish that goal on my channel. And I'm not saying that you need to use a 200 period exponential moving average as your trend direction indicator. You can do anything that you want to determine what the trend is. Tons of different methods out there, and there's no one best way to do anything. So I'm just trying to give you plenty of different ideas to work with, combining the multi-time frame analysis with the regular and the hidden divergences, going with the main trend, using the Bollinger Bands to get in at a discount, combining these different factors so that you can put the odds in your favor. It's all about having an edge, using good risk management, and being consistent, disciplined with your strategy. So guys, this is how to trade, and I really want you to put in the work, do the testing, paper trading, and make sure you're practicing proper risk management, because you're really going to regret it if you are going on a winning streak thinking that you're invincible. You're going to end up blowing your whole entire account. So just trade right and do it the right way. After 7 years of trading and 4 years of failing, it took me 4 years to even consistently trade. And I spent so many hours every single day trying to get better and trying to learn, and it took that long still. So don't expect that it's going to happen in a short period of time. It may take a very long time to learn. So while you're learning, the best thing you can do is preserve your capital, and not blow up any accounts. You want to have money left over to use in your trading account once you can trade profitably. You don't want to start trading with all your capital before you even learn how to trade profitably. So just some warnings and, some advice that I can give to you as someone who has done it the wrong way and spent years trying to learn how to do it the right way. Everyone who doesn't take this advice, you will end up regretting it eventually. Okay. It's even if it doesn't, even if you don't regret it initially, you get some great wins, you go on some crazy winning streaks, you triple your account in 2 weeks, you're going to lose it all eventually. Okay. So just, listen to that warning, and, at a minimum, you'll say, I can say, I told you so, when you eventually do fail, if you don't listen to the most important things when it comes to trading. But anyway, thank you. Thank you guys for watching. I appreciate all of you. Hopefully this was helpful and can give some of you ideas when creating your trading system. But have a great day. Thank you guys.